breakthrough year in 2025, fueled by the momentum of 2024. Last year, we saw 13 startups, 8 of them tech companies, go public, raising billions and cementing India's position on the global map. Swiggy's $1.3 billion IPO wasn't just India's biggest, it was the largest tech public issue globally in the year gone by. Now the stage is set for even bigger debuts from the likes of Zetwork, Meesho, Urban Company, Zepto, Grow and Pine Labs. Quick commerce, unsurprisingly, continues to redefine how consumers interact with food and grocery delivery. Swiggy Snack, Blinkit's Bistro and Zepto Cafe are leading the charge, using cutting-edge innovations to deliver meals in under 10 minutes, scaling their reach rapidly across cities. On the funding front, 2024 saw over $11 billion in venture capital raised, and that momentum is expected to continue as over $9 billion in dry powder waiting to be deployed. Domestic investors, family offices, global players alike remain eager to back India's disruptive startups. But the road ahead isn't without its challenges. Sticky interest rates, geopolitical tensions and trade tariffs could create turbulence, pushing founders and investors to adopt more cautious growth strategies. 2025 also brings opportunities, especially in artificial intelligence. AI is at the cusp of democratization, empowering startups to disrupt traditional sectors like healthcare, education, and even fintech. Now, this aligns with the idea of creating accessible, transformative technologies that can make a real impact at scale. Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shereen Bhan. To talk about the year that lies ahead, I'm now joined by Ritesh Banglani, the partner of Stellaris Venture Partners. Also with us, Dinesh, the head of investments at Rainmatter, and Vaibhav Domkundwar, CEO at Better Capital. Gentlemen, appreciate you joining us here on the program. Well, Ritesh, what a year 2024 has been. I very quickly gave a snapshot to our viewers of the highlights, the mega trends of the year gone by. As you look ahead, what are you most excited about? What gives you the most confidence as we enter 2025?
Hi, Shereen. I think we are at an inflection point of multiple technologies at this point as we enter 2025. You mentioned about AI getting democratized, but we are seeing similar inflections in certain other technology areas like electric vehicles, and the AI ecosystem going beyond just the foundational models that happened in 22 and 23. So we see the applications of artificial intelligence becoming more mainstream this year, and that would lead to a lot more startup opportunities.
Well, speaking of opportunities, let's talk about that $300 million fund that you've closed at Stellaris. Ritesh, what do you do with that? How do you intend to deploy it?
So our strategy is pretty simple, Shereen. We plan to continue to invest in seed and Series A rounds in early stage startups. We are sector agnostic, so we will continue to invest across a wide range of technology sectors. And we are starting to see quite a bit of deal flow continue in SaaS, continue in consumer technologies, and increasingly we are seeing more AI deal flow as well. So these will be the key sectors for us to invest in.
Yes, AI deal flows will certainly be something to watch for, but I'll come to that in just a second. But let's talk about what's happening at Rainmatter. And Dinesh, almost a decade closing in for you at Rainmatter. So let's talk about the decade gone by, but more importantly, not just the year, but the decade ahead. And, you know, when I was speaking with Nitin, he was talking about the kind of investments, the diversity of investments that have happened through Rainmatter, 275 crores across 47 startups last year. You know, it's been an exciting decade for Rainmatter, Dinesh, but what does the future hold?
No, thanks so much, Shereen, first of all, for having Rainmatter. I think, you know, obviously it's been an exciting 10 years. Over the past couple of years, I think we've deployed about 500 odd crores. So I think the next few years, as Nitin was also pointing out, I think we've got a corpus of about 1,000 crores that we are yet to deploy, mostly into interesting challenges, right? I think, you know, obviously there's no lack of capital in the country today for startups. There are more entrepreneurs. Being an entrepreneur is more mainstream, more acceptable. That is something of a credit to the entire ecosystem in itself, the investors, the government, and all the founders who've kind of enabled this. So for us, it's all about backing some of those exciting challenges that are more long-term. as Nitin also pointed out earlier, for us, Rainmatter is all about giving back in a sense to the startup community. So it could be fintech, could be health, could be climate. Some of those pressing challenges really need patient investors, and some of the domestic capital that we're at least bringing to the table is probably adding some value there.
Well, yes, speaking of opportunities and those inflection points, let's bring Vaibhav into the conversation as well. Vaibhav, thanks very much for joining us on this special edition of Young Turks. As we've heard there from Ritesh as well as Dinesh, plenty of opportunities and plenty of large problems that continue to require patient capital in order for us to build, the hypotheses out. What's looking most exciting to you? And of the big trends through 2024, quick commerce, of course, being one of them, which were the others that took you by surprise by the sheer momentum that we saw?
So, Shereen, we've actually built the largest pool of ignition capital, like I like to call funding, startups at the idea stage. And what we've seen over the years, we did neobanks in 2018, all the way to AI and outcome as a service in 2024. So going into 25, I think the main areas that we're excited about is consumer tech is back, right? So in consumer tech, we believe there are three sectors. I think from commerce perspective, I think quick commerce definitely is showing a lot of pull, and we will see that as a new platform for retail that will emerge. Secondly, I think marketplaces are seeing greater adoption with consumers sort of adopting payments and the full stack of interaction. And the third thing that we're seeing is finally digital content, when done right, is actually delivering incredible value to the level of monetization that is creating tens of millions of dollars of ARR for companies, right? So overall, I think we are very excited about just consumer tech, which I think we've all been waiting for that to play out, right? Because this is the largest consumer market in the world. So I think we're very excited about the signs that we saw in 24 and what we're going to double down in 25, these three areas. And then from a B2B perspective, I think we have this concept we call as outcome as a service, which we believe is going to redefine B2B and enterprise software entirely, where companies all over the world are going to buy outcomes. Pricing is going to change, and there's going to be a lot of disruption. So as we go through a lot of pain, I think the opportunity is much larger. So I think outcome as a service is a big block, which is about software investing for us going into 25.
Well, outcome as a service and what that could potentially mean as far as the entire SaaS space is concerned, a disruption that I want to focus on as well. But I just want to build on some of the thoughts that you mentioned, Vaibhav, and to talk about what you had talked about in your annual letter, the transition from default to live to thrive as far as your portfolio companies are concerned. How many are you actually within the portfolio today? And in general, as you look at the startup ecosystem in the universe, have we moved the needle significantly from default to live to thrive? And do you believe that the pace of that is only going to accelerate through 2025 because a lot of the cleansing perhaps has already taken place?
Totally. I think Ritesh and Dinesh will agree with me as well, because I think as an ecosystem, we've gone through the last 2 years of sort of redefining our conviction in what we were doing as investors, as founders, as partners to them. And I think what we are seeing across the board within our portfolio and across as well is that we are coming out of the last 2 years of slump in capital very, very strong, right? We're seeing companies founders recommitting themselves to their vision, and they are sort of rebuilding their companies with sort of renewed vigor, because I think they were able to prove that the market exists. It's really about building it correctly, factoring in the change of capital environment and things like that. So I think we are just going into sort of Thrive Plus mode in 2025, because more positive than they've ever been, because they can see revenue, they can see profits, and they know that there are multiple sustainable paths to sort of getting to the end state scenario that they believe in. So I think across the board, we're very excited.
Very excited across the board. But Ritesh, just to pick up on where Vaibhav left things off over the last 2 years, because of the lack of capital, because we've actually seen investors holding back? Not that there's been any lack of capital, but refusing to deploy any over the last 2 years, or at least any significant amounts over the last 2 years. It's actually forced founders, it's forced companies to focus on the business, to focus on the business model, to focus on profitability. This cleansing, perhaps, that's happened across different sectors, across different companies. How would you read what that means now in terms of more profitability as well as scalability as we look ahead?
Yes, Shereen, I think the last 2 years have been a period of tightening and discipline in the startup world. And what that means is that the business models to emerge out of this 2-year slump are stronger than the business models we saw going into the slump. Companies are more disciplined. Companies have more realistic valuation expectations. And so as the capital comes back, we think that it is going to go towards the stronger business models that have emerged out of this period. And that's what makes us bullish about not just the next year, but I would even say the next 5 years.
I would add, it's not just founders and companies, but I think even venture capital has become a lot more disciplined and a lot more prudent over the last 2 years. And I think that is something that we need to acknowledge and address as well. But, Ritesh, I want to build on what Vaibhav was talking about, specifically in the context of what AI is potentially likely to do in terms of playing a disruptor in spaces like the SaaS space. And I was having conversations with a few folks the other day where there is of course, confidence and opportunity that beckons, but also a fair degree of fear and uncertainty over what this could mean as far as existing SaaS models and existing SaaS companies are concerned. What do you think?
I think whenever there's a technology inflection of this kind, Shereen, there is a little bit of churn amongst IT providers. We saw this when we moved from on-premise software to cloud. A new set of companies came up. We saw this to an extent when we moved from desktop enterprise software to mobile enterprise software. And I think we will see a new breed of companies emerge, a new category of companies emerge as we have this next technology shift, which is from, I would say broadly, software which is process-oriented to software which is intelligence-oriented, driven by AI. And so we do think that a lot of the existing categories will get disrupted and new companies will come up in those spaces. Some incumbents will fight back and survive, but some of them will have a very tough time as this new category of companies takes their market share.
Well, speaking of new category of companies, Dinesh, let's also talk about the new categories that are emerging as potential spaces that startups are looking at. There is, of course, the whole wellness space. There is the whole going out economy, the experience economy that startups are betting on at this point in time. But, the ability to be able to monetize each of these spaces, do you believe that we're still talking about a 3, 5, 10-year window in terms of significant degree of monetization, or do you believe that it's going to be faster?
I think it's difficult to say. It depends, and the context of the business is very different. But just to answer your previous question, I think what's happened over the past 2 years. I think there have been immense learnings, as I think Ritesh and Vaibhav were actually pointing out. But I think there's also from our portfolio companies, what we've realized is I think founders now realize that the journey from being a 100 crore company to a 500 crore company to a 1,000 crore company are completely different. The skill sets that are needed, the kind of company structures that you have to put in place, the corporate governance that you really need to have in place. You got to take it very seriously in terms of how you really are making decisions, how your board discussions are happening. I think some of those changes, I think, are really adding to the ecosystem, because not only are these founders essentially managing their own companies, they're also mentoring some of the upcoming founders as well. So I think overall on an ecosystem level, there is net gain in terms of what's happened over the past 2 years. That being said, in terms of monetization, I think obviously there are a lot of opportunities in India. For us, at least, we are focusing on fintech, climate, health and storytelling as 4 sectors. Within these sectors, I think if you look at fintech, there's lots more to do in terms of helping common Indians save and invest better. There's lots more to do on the advisory front. We're focusing on all of that. On the climate front, obviously, plastic, pollution, water management, some of the fundamentals that really need attention will at least gain some attention from investors as well. On the health side and the wellness side, I think taking care of what you're really eating, playing a sport, and being really active are some of the fundamentals that startups can really also focus on. I think there's lots more to do in some of these areas. That being said, I think to your last point, I think not only are founders being careful about how they're running their companies, they're also being careful about the investors that they're kind of choosing to partner with them in their journey. So I think at Rainmatter, at least all of our portfolio companies, we're asking them to be careful about how they're building out, because that journey from 100 crore to 500 crore might be very critical as they keep going.
Yes, and as you pointed out, it requires a different set of skills to be able to transition from 100 to 500 to 1,000 crores. But, I want to focus a little bit on fintech, because that's a space that you're focused on, but that's also been a space that a lot of other capital has been chasing over the last few years, and it's seen its own breakout moment here in India. But it's also faced regulatory headwinds, regulatory risks. Do you believe that we're better placed today in light of some of those challenges that have perhaps been dealt with and addressed?
No, 100%. I think, on the regulatory side, we always have to respect what the regulators kind of seeing, because I think in most cases, some of the indicators that they see are probably way ahead of the times. And you look at some of the cautionary tales from the past, I think the regulators really kind of looking at those and kind of guiding the entire ecosystem. So that way, I think, the regulators have done a phenomenal job. If you look at it, I think we have at about 10.5 crore unique demat accounts today. If you look at the work that RBI has done with some of the lending sector reforms, etc., I think they've been phenomenal. I think it'll only help some of the founders and the entrepreneurs coming in and building in these spaces to have clarity around how they should be actually building in these spaces. So I think that clarity really helps, that stability really helps. I think some of those things will go a long way going forward as well. But in fintech, I think, on the capital market side, obviously, I think, as the markets have done well. And I think, over the next few years, I think we'll only look to add more and more investors or new to the market investors. I think, there's more to do in terms of awareness, education, which we're all focusing on. I think some of those critical areas, which are more foundational, might not be big bang changes in terms of fintech, etc. But I think those really need some attention from startups and entrepreneurs who want to build it.
Yeah, I think the addition of incremental demat accounts will also depend on the bull market continuing and the strength of the bull market itself. But, Vaibhav, let's address the capital market story, which has been a great story as far as the Indian startup space is concerned. I mean, the number of IPOs and the quality of some of the IPOs that went to the market as well as got listed, the kind of premiums that we saw at listing. I mean, it really has been in many ways a record-breaking year for India and for Indian tech companies. As you look at 2025, we've got a plethora, a long list of companies waiting in the wings to tap the markets this year. What have been the standout trends that you've noticed in the way that we've seen companies go public, in the way that they've priced themselves, in the way that they've listed, that you believe we need to refine and better on as we move forward?
No, great question, Shereen. Look, I think a lot of us in the tech ecosystem have been waiting for this for a long time, because if you look at any of the developed markets, tech actually makes up a big part of the public market. And seen is that education was done correctly. The market has understood how to look at these companies correctly, and it has paved the way for the 2025 cohort, which actually looks even more interesting as we go ahead, because there's a lot of diversity in terms of the companies that are about to go public in the next year. So I think the process has been very positive, because clearly the outcome tells you that the market was educated correctly. We went through some ups and downs as well in terms of retail investors trying to, buying the story, but then understanding how that business performs quarter on quarter, what the tailwinds and headwinds are, and things like that. So I think overall it's been really, really positive. And I think this is the beginning of the, let's call it the decade in India, right? And I think we're all excited. I think our portfolio is much younger. We'll probably hit the market in a few years, but we're very excited about the foundation that some of the early leaders have built for them.
Yes, it could potentially be that India's decade. But Ritesh, how do you look at the IPO markets as we start 2025? Of course, there's a fair degree of global uncertainty that will play on market sentiment. But be that as it may, that's not in our control. What are you looking forward to and how do you see the IPO pipeline?
No, I think the IPO pipeline is very strong. We are seeing that in our own portfolio as well as, of course, in the broader ecosystem. We think that the appetite has always been strong. In fact, for the past decade almost, the appetite in the public markets has been strong. The companies were not yet at a scale before 2021 to be able to list in India. They had not yet delivered profitability. But I think the last 3 years have shown that these companies can continue to grow really fast after the IPO as well. And either they are able to become profitable or they are able to significantly increase their profitability after accessing the public markets. And what the companies that went public in the last 3 years have shown us actually opens the door for a lot more companies to go public in the next few years.
Yes, as I pointed out, there's a whole list of them. And as Vaibhav was pointing out, it's a very diverse set of companies that are looking to go public. But Dinesh, one of the interesting things that we've seen with the way that the Indian quick commerce story is played out is that this is a uniquely India story. It doesn't seem to have worked anywhere else in the world. It's working here. And many point out that, this is equivalent to India's UPI moment. There is a little bit of a spray and pray approach at this point in time. Let's do snacks, let's do food, let's do all of that. But, what does the quick commerce story tell us about innovation, B, about the ability to scale and the ability to do speed and scale concurrently?
The story is a little bit more dependent on the density of at least say customers in India, the way we really interact with commerce in general. Also labor, right? I think, obviously quick commerce is riding on top of availability of labor in terms of all the riders that are available as well. That being said, I think, just speaking of IPOs as well, what Vaibhav was saying, I think, something to build on top of is that the fundamentals have never really changed in terms of IPOs, right? So, if you look at Infosys story way back in the 1980s and 1990s, I think if you listen to people speak then, I think value was left on the table then, and you have to leave value on the table today. And people have to be really predictable in terms of startups wanting to go IPOs as well. So with quick commerce as well, I think you have to build on those two things eventually, I guess. Like you said, I think the valuations have gone to a level where eventually public markets have to kind of deal with it. So how will that work out? Only time will tell. And will there be some value for the retail investors to invest in these businesses? And also will there be predictability, right? I think that is something that also we should be watching out for in some of these sectors.
Yes, predictability, a line of sight as far as consistent performance is concerned, that will be key. And one of the companies that a lot of people want to IPO is refusing to go down that road is, of course, Zerodha. But that's another story altogether. But let me ask the three of you. E-commerce, retail, enterprise software, fintech, healthcare. What would your top three bets be, Vaibhav, for 2025?
So, just double clicking on quick commerce, Shereen, I call it the quick India movement, right? I've been very positive about it for a long time. We actually launched 10-minute food with a company called Whoosh back in 2022. And, the market wasn't really ready to support at that time. So we're very excited about what's happening. I actually believe there is a new rail for retail that quick commerce is laying. And what we've learned from Jeff Bezos is that customer experience essentially drives everything. And what we are seeing with quick commerce in India is that the customer is actually pulling the quick commerce experience. And that's why you're seeing that a completely new generation of brands are being built on it. And all the incumbents are essentially racing to kind of join this, right? Yeah. So I think quick commerce is going to be very large. We're going to build infrastructure. If you look at Bangalore, I think a whole bunch of quick commerce is being delivered on Yulu's, a portfolio company of ours, essentially is the I guess the most effective unit of electric mobility in the country today, right? So when you look at quick commerce in general, it's going to be a very positive thing There are a lot of problems that will get solved, but I think the customer pull is so strong for that experience that it's going to be a big sector.
Yeah.
I am excited about digital consumer tech as well. There will be a lot of what we are calling as India plus AI, and there's a big question mark in terms of what it means. A bunch of founders will actually come back and tell us what they're seeing in the market. And then I think, like I mentioned earlier, I think outcome as a service is a big bet for us. We believe enterprise software is going to change. I'm famously, I guess, maybe not so liked for saying SaaS is dead aloud for about 2 years now, because like, again, Jeff Bezos said, AI is like electricity. It's that fundamental.
Yeah.
We have to reimagine software, right? And I think outcome as a service is the other big sort of concept that we are backing companies behind.
Well, I'm not going to be writing any obituaries just yet. We've been down that road. But you know, I like what you said about the quick India movement, because it certainly is a movement at this point in time, which is not just disrupting commerce, but I think it's disrupting customer expectations and fulfillment across sectors and across industries, whether it's banking or commerce or manufacturing. I think it is a disruptive movement that we're seeing as far as consumer expectations are concerned. Ritesh and Dinesh, very quickly, Ritesh, I'll ask you top 3 sectors.
So AI for the enterprise would be my biggest pick. There are a few business models we are bullish on that. Similar to what Vaibhav called the outcome as a service, we believe that services will be delivered using software as opposed to using humans, and that will be one of the biggest trends in enterprise software this year. Within enterprise software, we're also bullish on developer software, particularly from India, because India has the second largest base of developers in the world, and applying AI to the development process is a big theme for us. And the third theme within enterprise AI for us is vertical AI applications. We think that is a very large market, and almost all the vertical applications will get disrupted by AI as we look into 25 and beyond.
Dinesh, very quick.
Yeah, no, I think I have to go with all of our focus areas, which is fintech, because obviously lots more to do for Indians in the fintech space. Beyond lending, I think even on the climate side, there are problems that are affecting all of us, everybody around us. So I think climate for sure, and wellness, because I think there are more and more Indians who are starting to be conscious about what they are actually eating and how they're living their lives. So I think all 3 sectors definitely is something to watch out for the next couple of years.
Well, Dinesh, Ritesh and Vaibhav, many thanks for joining us on the first edition of Young Turks for 2025 and taking us through what the year ahead looks like, and the themes that you're going to be betting on, and what has you excited. With that, it is time for us to wrap up this edition of Young Turks. From all of us here on the team for now, goodbye. Thanks for watching. Do stay tuned. The news continues on CNBC-TV18. And your son's sailing every day. Yeah. So, talk about all the lessons and all of that. Are we on the cusp of a breakout moment for the experience economy in India?
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yes.
We live in 4 Indias. We live in the London of India, which is about 5 million people. And then there's about 50 to 60 million Indians, which I call the United Kingdom of India. Then there's 400 million Indians, which I call the Brazil of India. And then you've got about 300 to 350 million Indians, which I call the Africa of India.
Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities.
I've got a clean conscience. My karma is good. I sleep well.
Hello and welcome to India Business Hour. I'm Shereen Bhan. The top stories that we're tracking for you this evening. The Sensex and the Nifty decline for the third straight day, losing 2% this week. The mid-cap index down 6%. All sectoral indices, barring the IT index, end in the red. The Indian rupee weakens against the dollar, hitting another record low. The rupee is now just 3 paise away from the 86 mark against the greenback. Crude oil prices continue to rise, moving closer to $80 a barrel.
The 90-hour start from the top, and then if it proves to be fruitful or productive over, let's say, a period of 2, 3, 4 years, if we find that it works as a proof of concept, then let us talk about, implementing it down the line.
If you want a 90-hour work week, start from the top, says Bajaj Auto's Rajiv Bajaj. Adds the number of hours at work don't matter, but the quality of work does. Many entrepreneurs say longer working hours are biased against women after comments from L&T chairman arguing for a 90-hour work week spark an uproar. The Supreme Court orders a stay on show cause notices worth 1.12 lakh crore rupees against online gaming companies. Says no further proceedings should be carried out against the companies till the court has arrived at a ruling. The court will hear the matter next on the 18th of March. The Petroleum Ministry seeks 35,000 crore rupees from Finance Ministry as compensation for LPG under recoveries of oil marketing companies. Sources say fuel retailers expect fiscal support in the union budget. The government blames the migration of data systems for overstating gold imports by 131 tons between July and November of 2024. The migration is still not complete due to some technical glitches. TCS management says discretionary spending picking up in banking and retail a day after the IT giant reported a stable Q3. 2025 will be a better year, says TCS CEO K. Krithivasan. Israeli forces intensify raids in West Bank even as the assault on Gaza continues. 490 Palestinians have been killed in the first 9 days of 2025, according to Gaza officials. Overall death toll has crossed 46,000. At least 10 people dead as wildfires continue to rage around Los Angeles for day 4. More than 1.5 lakh people have been forced to flee their homes, with the cost of the destruction estimated at around $150 billion. Well, we'll come to all of that in just a bit, but first up, the market action of the day. The consolidation continues on Dalal Street as major indices decline for the third consecutive session. The Nifty and the Sensex both closing the week with losses of about 2%, hitting their lowest level that we've seen in nearly a month. Mid-caps have seen sharper cuts, and the mid-cap index for this week also closed in the red. That's the Sensex and the Nifty for you. The mid-cap index actually lost about 6% for this week. All sectoral indices, barring the IT index, closing in the red. The IT index was up by about 2%. We've seen earnings season kick off with TCS, and the numbers have been